What's up YouTube, it's Gustavo and I'm back with another video, man. So in this video, I'm gonna show you how I made $10,000 on gold in a space of 4 minutes. Check out the video. What's up people, it is your boy Gustavo. I'm back with another video. And in this video, we will be breaking down gold. We're going to be breaking down how we made $10,000 on one trade in less than 4 minutes. As you can see on the thumbnail, as you can see on the intro, that is exactly what is about to happen. So without wasting any time, let's get into it. So guys, you can see that we are on gold right now. We're going to a higher time frame, right? And guys, when I'm breaking down this trade, I'm going to tell you how to take these A setups and how to monetize and capitalize on this trade. So we are looking for gold. We are trading gold and we are on the high time frame. Our high time frame, guys, is the daily time frame. As you can see on my previous videos, I've broken down how to understand and have the simplicity of understanding market direction when you scale down to smaller time frames. So as you can see right now, we're on gold, right? And gold has been bullish ever since, right? Gold has been bullish. As you can see, gold has been bullish since 2019. Gold has been bullish since 2018. Gold has been skyrocketing ever since, right? So since you're a retail trader or whatever, trading in London session or Asian or New York, you want to capitalize on gold, right? But now you understand that gold has been bullish. So do I have to buy or do I have to sell? At this current moment, gold is bearish right now. Short term, gold is bearish, but long term, gold is bullish because gold is buying long term. So as you can see, when you scale down to our bigger time frame, if we zoom in, gold is bullish, right? Gold is bullish. Gold is bullish. Gold is bullish. So what are we looking for? We're looking for market structure. We're looking for direction. Gold is bullish long term. So we are buying gold long term. But how we took this trade, I'm going to explain by scaling down to smaller time frames. So what do we see on gold? Okay, on gold, we see that we have our area right here. A lot of you know it as order blocks. A lot of you can call it as your AOVs, as your VFGs, as your points of interest, whatever you call it. But I call it an order block because it's the high of the high. It's the highest, right? And actually, gold went into that area and tapped it, as you can see right here. It went into the area and respected that area and dropped down. So I'm gonna show you how to capitalize and how to take the sale and on how I took the sale and made $10,000 in less than 4 minutes. But it's not really 4 minutes because crazy enough that I closed this trade yesterday and yesterday was Thursday. And I opened this trade Monday London session, and I've been holding it for more than 4 days, right? But that's on my long-term trading account. But on my scalping trading account, I've managed to double my account. So on gold, we understand that what is this? It's our it's our it's our order block, right? It's our order block. When we scale down to 4 hour time frame, what are we looking for? We're looking for behavior, right? On our daily time frame, we're looking for direction, we're looking for market structure. But now on our 4 hour time frame, we're looking for behavior. How is it behaving towards this area right here? How's it behaving when it got here? Did it break? Did it give us any other confluence in terms of candlestick formation? What happened when we got here, right? Because remember, guys, it's not your job to predict, but it's your job to react. So as you can see right now, that gold respected this area by dropping. But how did it drop? First of all, we understand that since gold was here, right? And before this happened, before this part happened, guys, before we got gold on the other side, it was this. So we understand that, okay, this is our order block, right? And if the market is still here in this area right here, we're waiting it to pull back in this area so we can sell again. That is clear confirmation. And also we have liquidity where in this area right here. We have liquidity in this area right here. Let me just pull through. We have liquidity in this area right here. So we have a bunch of liquidity here waiting to be taken out. Waiting to be this is liquidity, this is liquidity. This is also liquidity, this is also liquidity. That is liquidity, right? So we are waiting for the market to take out that liquidity. So the moment you realize that the market has to take out that liquidity, you're already expecting bearish movement, right? So as you can see that we have our uptrend and the market broke it, right? So how do we capitalize? On our 4-hour time frame, we're looking for behavior. On our daily time frame, we're looking for market structure. We're looking for direction. Are we bullish? Are we bearish? Are we consolidating? What's going on? Then when you scale down to 1-hour time frame, what are we looking for? We're looking for candle confirmation, right? A lot of you take your entries here. I take my entries here too, but sometimes I'd like to scale down into a more smaller time frame, like your 15 minutes or your 5 minutes, depending on the trade, if I want to hold it or I just want to scalp or intraday trade. So as you can see right now that gold broke this area, right? So let's say that the market is here. Gold hasn't created this. The market is here, right? The market is here. So when gold immediately tapped in into this area right here, when it tapped in here, what are you looking for? You're looking for sales. A lot of people, we have two type of trades, right? Me personally, there's aggressive entries and there's risk entries. When it comes to gold, I took both because I have a lot of accounts that I'm handling, and so I can be versatile when it comes to style. On my scalping account, I took the aggressive approach. This is the aggressive approach. Immediately when gold gets into this area right here, immediately when it taps into the other block here and creates a momentum to your direction, which is bearish, I sell immediately. So I took the trade like this. Immediately when it closed, the 1-hour candlestick, my stop loss is above area, right? My stop loss is above area. But here it's different because my stop loss is above area where on my holding, on my holding account, right? Because I know that anything can happen. Gold can push back, play into this other block, play into this other block and take people out, stop hunt, or create something that is totally different, right? So my stop loss is above here. And remember, guys, this is just an area where we are waiting for gold to approach. It's the higher high, so it has to be marked because we're expecting gold to come into that area, see how it reacts, and then drop. If it breaks above, then it tells us that, okay, that area is not well respected, right? So on my other accounts, on my long-term holding account, my stop loss is above. And why is my stop loss above? The reason that my stop loss is above is that, guys, you need to make sure that you put your stop loss where there is a key level, supply area, or demand area. But put it against something. Do not put your stop loss anyway because you think whatever you're thinking, because we call those chicken traders. They get slaughtered. Why? The bearish are moving the market and the bullish are moving the market. Make sure that you put your stop loss in a respectable key area, your supply, your demand, your resistance, your support, whatever it is, make sure that it's above that or below that, whether you're buying or selling, right? So on this trade, on my holding account, on my swinging account, I took gold like this. As you can see, it's just under 3%, just under 2%, 3%, and crazy enough that we are still holding, right? We are still holding. This is how I took the trade on my long account. You can see that the stop loss is very much wide, right? Remember, if the stop loss is more wide, if the stop loss is more than 50 pips, depending on your own risk management, but giving you clarity on my account, when my stop loss is more than 50 pips going up, I do not take the trade. I do not take the trade. I do not take the trade. Those are my rules. I do not take the trade. No matter the trade is so beautiful and good in probability, I do not take the trade. It goes against my plan. Because if I do take the trade, I am literally playing myself, right? Because I'm not going to succeed in the long run. So make sure, guys, that your stop losses is above area. Follow the plan. On this account, long-term trading account, holding account, it's not more than 50 pips because I know that my ratio is 1:3. So sometimes I hold depending on the trade. So if I'm risking 50 pips for 150 pips, that's already 200 pips, right? So I'm risking 50 for 150 pips. Do you understand? So that is the simplicity of it. That is how we took gold. This is how we took gold, right? And of course, we have this 90% rule right here, waiting for it to come back here, and it did, right? And it did. Funny enough that on my holding account, I'm still holding this trade, right? So daily time frame, we're looking for direction, market structure. Are we bullish? Are we bearish? On our 4-hour time frame, we're looking for key levels, where the market is currently going or where the market is currently at, and how is it reacting into that level, into your supply, into your demand, into your resistance, into your support, whatever the area is, what is it doing? How is it behaving? What type of candlestick confirmation is it giving you? Is it giving you momentum to the upside? Are they more bullish? Are they more bearish? Are there more sellers? Are there more buyers? What type of information is it giving you? Do not rush into the trade, right? And then when I scale down to my 15 minutes time frame, of course, it's entries. When you scale down to our 15 minutes time frame, it's our entry. This is how we take the trade, right? So my 15 minutes time frame can be my entry. Also, my 15 minutes time frame can my 1 hour time frame can be also be my entry. It depends on the trade, right? It depends on the trade. So right here, guys, you can see that that is just it, right? That's how we took gold. Simplicity. This is what we call a risk entry, right? This is a risk entry because we are aware that anything can happen, right? But in that risk entry, we know how much we're risking, right? But lucky enough, not even luck, but strategy and psychology enough that the trade played out. Because if you take this type of trades 100 times, I bet you 90% of the time they're going to be successful. So on gold, that is it. That is the simplicity of it. You guys try making the market a roller coaster. It's not rocket science. The moment you keep it simple, the moment you keep it basic, that's when you actually realize what works, what doesn't work. And that's when you actually make a lot of progress. But you guys want to put your SMS, you want to put your RSIs, you want to put your Fed tiles, you want to put this, and that. The key here is simplicity. Know which time frame are you trading? Know which, sorry for that, know which pair are you trading? Know which time frame has a purpose. What does the 1 hour do? What am I looking for in the 1 hour? What am I looking for in the 3 hour, in the daily? The moment you break down and know what you're looking for, things become easy. So as you can see, guys, that is the trade on gold. But right now, I'm going to show you to take a proper risk entry with less pips, but a lot of reward. So when you scale down, again, when you go back to our 1 hour time frame, let me just remove this right here. It's pretty much the same thing, right? It's just that on my risk entry and on my risky entry, on my calculated entry, it's different than on my risk entry because the risk entry that I took is more aggressive than on the other one. So I just showed you right now the risk entry. Immediately when it closed the candlestick, the 1 hour gave us moving to the downside. We took the trade, and our stop loss was above key level, was above supply, and we are looking for 1:3, and that's the beauty of it. Now, the whole point of it is to hold, right? It is to hold. It is to hold. Now, your game is to have patience. And another skill, guys, that I want you to know is that if you want to master discipline into the market and master your emotions, do not execute manually, right? It's either your trade takes or hits TP or hits stop loss between the two. but do not exit manually. The moment you exit manually, you don't have discipline. You will never have the consistency. And if you don't have those two, you will never see if you're going further or you're stuck in one place because you'll just keep on losing money, blowing prop firms, and just it's a bad habit. So that's number one rule. That is my advice to you. Put that on your notes. Make sure that you do not execute your trade manually. The only time you're going to execute your trade manually is when the market is giving you more information. If you were bullish and now it says, you know what, Gustavo, actually the market is changing direction right now. Why is it changing direction? Because it's giving us this, and that, right? We are changing from bullish to bearish. That's when you can start removing your trade manually, right? So do not remove your trade manually for no significant reason. Don't just create excuses. If there's no significant information why you shouldn't remove your trade manually, then don't at all. It's either TP or stop loss. Only, nothing more, nothing less. So let me show you how I took my trade in a proper risk term with less pips, meaning less risk and more reward. As you can see, guys, it's pretty much the same thing. The market came here into the structure, right? It came here. It came into this area right here, right? It tapped here, give us this candlestick formation, this impulsive momentum to the downside. Now we know we have impulsive momentum. So what do we do? Are we waiting? Yes, we're scaling down to our 15-minute time frame. Why are we scaling down to our 15-minute time frame? So we can get our entry. But now, like, okay, Gustavo, but the 1 hour is already closed. So how do I take the entry? Do I take the entry now or should I wait? And if I do wait, what am I waiting for? Right? Okay, this is what you're waiting for. You're waiting for a pullback. You're waiting for the market to pull back, right? This is the simplicity of it. We understood that the market is here, created a double top reversing, right? We are changing from bullish to bearish. So what are we looking for? We're looking for confluences that's gonna go bearish. So cool. This is our double top. It's a reversal structure. We already know that, right? Okay, the market came here, created this. What is this? Our BOS. Break off structure, right? Break off structure. This is our BOS. This is our break off structure, right? So what are we looking for again? Okay, the next thing we're looking for the market to come back here. Why there though? Why that area specifically? Because this is where liquidity is, right? This is where liquidity is. A lot of traders have their stop losses above here. Their stop losses are above here. Their stop losses, they're above here. But luckily enough, the market didn't create a market to sweep, didn't go there and take liquidity. But it is a key level. It is a supply area, right? It is a supply area. It's definitely a supply area. So when it's like this, really have your POV right here. The market is dropping. It dropped, right? Broke of structure, right? Broke the structure, came back. We have our POE. We're waiting for the market to come into this area right here. Remember, guys, this is not, this is an area. This is a key level. This is an area. Anything can happen here. The moment you see momentum to the downside, you take the trade. You do not hesitate because you have a lot of confidence in your side. You are confident enough to take the trade, right? So the market came back, this pullback, this pullback. And another confidence you can have too is this, right? This is our, you can call it a channel or you can call it an uptrend, right? We have this. We have this. So what I'm trying to say, guys, there's a lot of entries you could have taken. There is a lot of entries you could have taken. You could have taken immediately when it broke, right? Your stop loss is above area. And depending on the risk or depending on the reward, depending on your trading plan, but usually 1:3 is a good way. Even 1:4, beautiful trade. TP, right? Beautiful trade. Beautiful. Simplicity, right? Simplicity. That's a second entry. Could have taken it here, right? The first entry is here. Stop loss above key level, right? Simplicity of it. Simplicity of it. If you want to bang that 90% right there, you can. You can. Simplicity of it. Here we go. Just 15%. How beautiful is that? Look at that. Beautiful, 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 beautiful. And on top of that, guys, we have a lot of other entries that we can take. A lot of other entries. Gold was just giving us the best, the best, the best, the best, the best. We have this right here. This liquidity there, right? This is our break of structure. We have this level right here, right? We have this level right here. How can you take this trade? Simple, 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 simple. The market gave us this impulsive. So we know that this is an impulsive move. This is an impulsive move. This is a correction move. All of this is a correction move. So where are we looking for sales? We're looking for sales here. Immediately when it comes into this area, take traders out, stop losses, and then creates momentum, we sell. We sell. Immediately, we sell. We sell. We sell. Where's our stop loss in this point? Our stop loss is above area. You can scale down to a 1 hour time frame or to a 15 minutes time frame to see. But our stop loss is just above the high. 1:4 into this area right here. 1:4. 1:4 into this area right here. 1:4. 1:4. There's a lot of ways you could have taken this, right? There's a lot of ways you could have taken this. Break of structure, came back, you take the entry. Or you have your supply area. Remember, when we're selling, we're looking for supplies. When we're buying, we're looking for demand. So that's one thing you need to keep in mind. Selling, nice. You could have taken it in a different way also, right? Could have taken it like this also. There's a lot of ways, guys. Guys, just keep it simple. Keep it simple. Keep it simple. Simplicity beats everything. Simplicity beats everything. We have this. What is this? What is this? Impulse, correction, continuation. Just like that. Impulse, impulse right here. Impulse, correction, continuation. So when the market was here, pulling back to this area, you're looking for the second touch. Created your area, then you sell. Your TP's here or even further, right? Oh, but like, where's the other entry? There's a lot of entries. Here's another entry for you. If you missed the first one, we have this continuation pattern, double top. Take the entry without hesitation. Stop losses above key level. Then you hold 3%. TP in that same area, in the same area, in the same area, in the same. So how many trades you could have taken if your TP was here? It's the first one. It's the first one from the top. It's the first one here, right? It's the second one here. It's the third one here. So you see how many entries you could have taken. There's a lot of entries. There's a lot of entries. There's a lot of entries. Oh, Gustavo, here's another entry for you. Wait, where's another entry for me? Here it is. Here it is. Here it is. Here it is. Simple. This one is a more clumsy one, and I don't recommend it because at this point it's just consolidating, right? But it's failing to break above this area right here. It's failing to break, fail 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 to break. It's already confirmation that we are selling. Sellers are still stronger than buyers. But I don't recommend this one because it's a bit clumsy. Because a lot of people would have said this is just a accumulation phase, right? It's not going anywhere. But at the end, what happened? It dropped, right? It dropped, 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 and still dropping till this day. So guys, those are the entries. We have entry there, we have entry here, we have entry here, we have entry, we have entry here. Guys, gold has given us a lot of opportunities. We managed to double our accounts. That's why we made $10 in 4 minutes. And that's why we managed to pass prop firms in the space of one trade. So guys, guys, I don't want you to miss out on the same opportunity that gold is giving us right now. And guys, this is not only gold, but in any pay, in anything that you're trading, if you follow those rules, if you follow market structure, understand what is it that you want, understand how to approach the market. And the best thing that you can do is have the patience and wait, right? And wait, and wait, and wait. Guys, there's no time to backtest anymore. People are making money. There is no time to backtest anymore. You know your strategy. You know what works. You know what does not work, right? The problem is not the market, is you. And most of the time, the problem is here. If you can just do the same thing, the correct thing for a long period of time, for consecutively, I promise you, you're going to get results, right? It's better to lose a trade knowing well you followed your plan than to win a trade knowing well that you didn't follow your plan, because now what's that? It's luck. It's luck, and we don't work with luck. Doesn't last. We need something that's working, and this is working. This is the blueprint, right? So to run it over before I end the video, how did I take this trade again? Higher time frame, scaled down. My top time frames I'm used is daily, 4 hour, 1 hour, 15 minutes. Daily time frame, I'm looking for market structure. Where is the market going? Is the market bullish or bearish, right? Is the market bullish or bearish? Following the higher time frame is going to save your account big time. Always follow the higher structure. Always follow the higher time frame. And then when you scale down to smaller time frame, you're just looking for more confluence on why you should sell or why you should buy. But you already have your decision. The market already gave the decision on a daily time frame that we are buying, Gustavo. Okay, I'm scaling down to my 4 hour time frame. What am I looking for? I'm looking for behavior, right? The moment you buy already, guys, you're looking for demand areas only. You're looking for demand areas only. When you sell, you're looking for supply areas only, right? Supply areas only. The only time you can go against your confluences that you need from the market, if the market is giving you confluences that no, we are reversing from bullish to bearish or from bearish to bullish. That is the only time. But if the market is following clean market structure, you just follow the plan, right? So daily market structure, bullish or bearish, are we buying or selling? 4 hour time frame behavior. How we're behaving in the key level, how we're behaving in the supply, in the demand, in our point of interest, in our fair value gap, in our liquidity sweep. How are we behaving in that specific area? On our 1 hour time frame, it's confluence again, but this confluence, it's more of candlestick confirmation, right? Candlestick confirmation. Are we getting our momentum to the downside? How did we close? Are we still reacting to this level? What's going on, right? Sometimes you can take your entries on the 1 hour time frame, depending on the trade, right? And again, 15 minutes time frame is just entry. You just take the trade. You can wait for other confluences just to build up the confidence in you. But in the 15 minutes time frame, I already made my decision. I'm taking the trade, right? And if you do that for a long period of time, I promise you, because yes, the market, everyone is there to make money. We don't care how you make your money. But if you don't know how you make your money, you won't be able to make your money forever, right? Forever. But if you know how to make your money, that is a skill that someone cannot take from you, right? So guys, not saying much. All I'm going to leave you with is follow your plan. Follow your plan and keep on trading. Do not stop trading. I don't care if you've blown accounts, you've scammed people. whatever you did, you made loans, you sacrificed things for this thing. Do not stop. You come very far to quit right now. Do not stop. Do not stop. And if you don't have an account or you're not actively on the market, get into the market, know what's happening. Know what's happening. Know what is happening. Mark Douglas says you're only a trader if you have an open trade. But if you don't have anything open, you're not a trader, which is kind of the truth. It's kind of the truth. So another thing that if you don't have the means to have, but if you don't have the money or you don't have the prop from other account, get into the market also. See what's going on. See what's going on. See what's happening, right? There's always a way, guys. If you don't have capital back test, do something that's gonna make you involved, right? So, guys, that is the end of the video. That is how we made $10,000 on gold, which is crazy, which is so crazy, crazy, crazy. Gold is really gonna pay my bills, no lie. And on my next video, I'm gonna do something different. I'm gonna do something different. These videos, guys, are all educational videos purposes only. I'm not promoting anything. I'm not bragging about anything. I am just teaching what I know, teaching what definitely works, and teaching what makes me money. So, without any further ado, it is Gustavo, and I'll see you on my next video.